Good morning, traders. This is an update to my market open trading strategy. I updated it early last week. I'm going to go over what happened and why it had to be updated. You may know that I was trading with Webull 3.0 version for a very long time because it allowed me to trade off of the watch list, which I really liked. I would go to top gainers one day, click on all, organized by volume. So this was my screener. I would look at the top 10 stocks, make sure that they met my float size requirements, and then I would add them to my watch list like so. And then I would go to the watch list and click on Monday, and then all the stocks on the watch list would be there, sometimes in multiple pages. And then if I just click in the chart, then that would give me access to my hotkeys, and I could place orders directly into that stock. So when Webull 5.0 came out, I downloaded it, and I was interested to see if the tradability in the watch list was there, and it is not. But there's a workaround, and then it also opened my eyes to a major flaw in my strategy, because the whole strategy was based on the screener, the top gainer screener, organizing by volume, and I incorrectly assumed that I was looking at the number one volume traded stock here, which is sometimes the case. In fact, it was in this case on Friday, but it isn't always. The number one stock here isn't necessarily the highest volume traded stock if it's not also the top gainer. So that is a big flaw, because that was the whole premise of the trading plan. So now what I'm doing with Webull 5.0 is I built a customized screener using the active top gain. Well, this isn't the top gainer, this is the active screener. And this one is strictly organized by volume. It doesn't matter if the number one stock is a top gainer or not. It shows you the highest volume stock. So all I'm interested in are the top 20 highest volume traded stocks that are also top gainers, right? So this criteria trumps the top gainer list. And then when I click on them, I'll find out if it meets my float size requirement. Then what I do is I go over to I built this on the stocks page, but now it's a custom setup. So if I click up here on these three horizontal dash lines, which I know are off the screen, but it's right here in the corner of Webull, go to customize layout. I've already saved this layout based on the stocks page, where I just have multiple charts. If you click chart and you click this little grid thing, you can go down here and increase it to 9 charts, and then whatever stock that I want to trade based on what pops up on that watch list, which I keep open on on the screener, which I keep open on my laptop. I can just type in ticker symbols. I'm just doing random ones here, not things I would necessarily trade, just so they pop up here. And now I can have up to 9 charts. And again, I can just click in each chart, and whatever chart I click in, I can access my hotkeys and put in an order to take a trade. So the big difference here is that I am narrowing down the screener criteria to only include the top volume stocks, because volume is a major catalyst of price going up. It doesn't necessarily mean the price is going to go up, but it really helps. It's the number one most important criteria. So let's take a look at the actual strategy here in a Word document, just so actually this is the plan and the strategy combined. So this is what I do every single day is I read this list and I follow the instructions. So at first I'm checking my internet connection. That's crucial. I downloaded Speed Test. You can use whatever software you like, but I have it pinned to the taskbar so I can open up immediately and just check my internet connection every day before I start trading, because sometimes you'll even have this little icon, but things aren't what they seem, and even all the lights on the modem will be on. But one day I had the download speed exactly where it was supposed to be, but the upload speed was 0. So the platform looked like it was glitching, but it was because my upload speed was basically 0. So that's that. Read through your plan every day. That's so important, because sometimes things don't happen for a very long time when you're trading, and then all of a sudden something pops up that you haven't seen in a while, but it's in your plan, but you haven't been reading your plan, so you forget what to do about it. So that's why you want to read your plan every single day. And as you learn those new things that happen to you while you're trading, you go, uh-oh, I don't have anything in my plan that tells me what to do for that. But after the fact, you kind of figured out, okay, this is how I should have handled that, then add it to your plan, and then you'll be ready for the next time you see it, which may be weeks later or a month later. So that's why you need to read it every single day. So here's the first thing. Now, I kind of update this as I go. When I have a problem or something happens, I put it right here at the top of the plan so that I read it and it goes into my mind. And this happened recently. If one trade goes to 2 hours, stop taking any additional trades. This is an old scenario from my pre-market trading days, and I kind of forgot about it. And something happened on Friday where I had 2 winning trades, and then I took a third trade because it met my setup and my criteria, and I thought I have to take this because of those things. And then, the trade failed, and if the trade would have succeeded, maybe I wouldn't have had this thought, but it doesn't matter because this is a good rule. And the rule from my pre-market trading plan says that if I do have a trade that hits my profit target, that I should stop taking any additional trades and just let the remaining trades that I'm already in play out. So that way, if a later trade goes against me, I don't feel like I'm giving profits back, because that hurts me psychologically, and you have to think about those types of things when you're trading. Second, don't forget to let the price pull back after breaking through the previous high. Now, this happened a lot when I started trading this market open strategy. This is something I got really good at during the pre-market. The pre-market, just everything is kind of slower, so there's a little bit of time to think more clearly. And the market open, there's so much energy at the opening bell that things move very fast, and there's more adrenaline and all that, and you can't think as clearly. So I have to remind myself that even once the price breaks through the previous high, I have to wait for it to pull back, and then I can enter. That's what that's about. Always set the stop loss at the low of the previous candle. So again, this is based on my ABCD pattern. You can search my videos. I have a recent video explaining what the ABCD pattern is, and if it's not exactly an ABCD pattern, like sometimes it starts out as an ABCD pattern and then goes into consolidation, then I can make the stop loss the low of the consolidation area. All right, so max price per share, that's just based on like 10% of my day trading account. So I have my account split up right now into day trading and swing trading, so that's approximately 10% of my day trading account. Only enter on the first pullback of an ABCD pattern. Again, watch the video about the ABCD pattern and you'll get to learn everything about that. So, and then just some more information about, what really is a pullback, how I define a pullback, because it's a little bit nuanced. So it's not always like a textbook thing. So read through this and let me know if you have any questions. This is a really important rule. Stop after 3 losing trades. That's crucial because you don't want to make your red days bigger than they need to be. So just stop after 3 losers. So this is the actual strategy right here, which you can read through. And again, let me know if you have any questions about this. I'm not going to go over every single line. It's pretty self-explanatory. I try to make it pretty detailed so that there's no questions about it. And there's no wiggle room in the plan or the strategy. I have to follow it 100%. And then here's some more interesting information about the number of trades I can take. Now that I've changed my screener criteria, I rarely get above 3 or 4 trades, and that's good. I really don't want to be taking this many trades, this 10 trades. I'm only trading from 9:30 to 10, but I just am doing that while I'm test trading because I don't want to be limited if I do get the setups that I need. But for this to happen, I would have to get into 10 trades at one time, and there can't be 3 stop outs, and not one of those trades could have hit to our profit target. So that's pretty unlikely. If I start getting into multiple trades, either one of them is going to hit my profit target, or I'm going to get stopped out in 3 trades way before I get to 10 trades. And once I kind of figure out what that number is, I'm going to update that at the end of this test trading. So then I talk about share size and things like that. And when I stop, looking for entries, stop outs, and re-entries. So this is, you just read that and let me know if you have any questions. But basically, if I get into a good setup and I get stopped out, it's generally a fake breakout. And if I take 2 more entries on it, the chances of the second or third entry working out is much higher than in the first. Then I have some rules. Now these are basic rules. I have other rules that I follow that are kind of ingrained into my trading style that are not in this plan because I'm trying to keep it as small as possible so that I can read through it quickly. But check these out. Again, let me know if you have any questions. And this is the goal of the plan, to average a win rate above the break-even point of 33%. So I trade all or nothing 2R, meaning that my profit target is always 2 times my risk. So as long as I'm above 33% win rate, I'm going to be profitable. And so far, since I've updated this plan, the win rate is extremely high. I'm not expecting it to stay there, but I do expect it to be pretty high above the break-even point. And then I always remind myself of the basic idea of the ABCD pattern. So let's say that this is 930 right here, and the price action has been just trading up and down in the pre-market. It doesn't really matter, it could be going flat, but right here at 930, let's say the market opens and then the price breaks up through the previous high. That's what this line is. Breaks up through the previous high, then I'm waiting for the pullback, and then as soon as a 1 minute candle makes a new high, that's where I get in, and then my stop loss is below the previous candle that I entered on, unless it's a consolidation area, meaning it chops around and then it goes up. So that's pretty much it for the plan and the strategy. This is based on a ton of testing, or a ton of trading actually, not even test trading, which I did in the pre-market starting in November, probably late October, and I started tracking it on this particular spreadsheet in December. And if you look at my this is like the summary of the trading, you could see that in the pre-market I was most profitable every single month, and then I just decided to drop the intraday and after hours trading and just strictly do pre-market trading, and this was my best month ever in March. And then in April was one of my worst months ever, where I pretty much almost gave everything back of my best month. But I was doing the exact same thing that I had done in all these previous months, including late October and November, which were all profitable in the pre-market. So I assume if I continued that for the remainder of the year, that eventually I would get back and get this back and end up green overall. But I decided to switch gears and to strictly trade the market open because I know that's more helpful to more traders. So that's what I'm doing now, and I'll show you my current spreadsheet. This was the last test that I was taking to 100 trades, and I stopped doing it after about 45 trades because of what I found out about my market open screener, or my screener that I was using during the market open. So we went over that at the beginning. So that's why this stopped, but this is still valuable information because the win rate was about break even with those flaws in the screener. So that shows you that the plan was very, very close to being successful. This is the plan as it was without any errors on my part. It was still profitable, and that was with those screener issues. So I think now with this updated screener, the win rate is going to be quite a bit higher. So far it is. And in fact, without errors, I don't know if you watched my live trade recap from Friday, I took a trade on METX and then later realized, if I would have used that rule that I have in my pre-market plan saying that after I have a 2-hour trade to stop trading, that this trade would not have been taken. So I ended up boxing this in red and saying that that was an error of my trading and not the plan. So far the trading plan without taking any error trades is the win rate is 100%. The average of my trade days so far is 83%, and the average of all the trades, including the errors, is 75%. So if you average those three together, you're probably going to get close to what the real win rate may be. But we're very early on. We've only taken, I didn't count all the trades yet, 4 trades here. Let me put that in now. So we've taken 4 trades so far. We have to get to 100 before we know if this thing works or not. So anyway, let me know if this video was helpful to you. If it was, hit the like button. If you have any questions about this trading plan or my strategy. Also, one thing I didn't mention is I'm only trading with 1 share while I'm testing. There's no reason to trade full position size while you're doing test trading. I'm still using real money, so it's much more effective than paper trading or back testing. Much, much more effective. You don't get things like slippage when you're back testing. You don't get the emotional or psychological effects when you're back testing or paper trading. So that's the benefit to trading with 1 share. So you can start trading with just probably as little as $500. You can even do it with $100, but $500 would allow you to take a few more test trades each day with a cash account. And there's really no reason to start with a $5,000 account or even an account above the PDT rule, which is $25,000, because you haven't even proven that you're going to be profitable yet. Even if you found some system or you paid for some system or some course that claims that, hey, this strategy is proven profitable, and you start to try to trade it, I guarantee you're not going to be profitable in the long run. there's a lot of other factors involved that you won't even know exist until you start trading with real money. So I strongly recommend just trading with one share until you've at least proven yourself profitable after 100 trades. And if you're brand new, you really need to do even more than that, 100 days or 1,000 trades, and then you are probably going to be profitable in the long run if you have developed a system doing that you can continue to repeat. So again, let me know if there's any questions. As always, I like to leave you with always have a plan going into every single trade. No matter what, always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.